Over the years, I have found that most people are looking for a magic solution or secret investment strategy to secure their retirement. I have a different way to look at your money. Regardless of how much money you make, you must have a way to keep up with every dollar that passes through your hands. Otherwise, you will inevitably spend more than you make. The amount of money that you will earn in your lifetime is a finite amount. Some people make more than others over a lifetime, but everyone has a limited amount of money to work with in their lifetime. Managing the money you have already earned is more important than finding creative strategies, chasing higher rates of return. Very few people ever spend much time planning how to manage their current cash flow. It is far more difficult to pick investment winners than to come up with strategies to keep more of the money that you have already earned. So what can you do to get on the road to managing your cash flow? Let's think of your financial life as building a house. We have to pour the foundation first. The key to your financial success starts with a foundational concept. Keeping a written budget is the first step. It is the single most important concept for you to embrace. You can download a free, simple budget template at www.ethandaw.com/budget. So your first homework assignment is to write every monthly expense you have in the monthly expenses column on your budget worksheet. Once you have your monthly expenses down on paper, go back and rate them from most important to you to least important. Crisis is inevitable. Most of life's troubles inevitably affect your money. Making tough decisions while you're in a clear frame of mind is far more desirable than being forced to make tough decisions while you're a big hot mess. Once you have a handle on what your exact expenses are each month, then we need a way to manage your cash flow. We are going to do that with a concept called the three accounts. The first account is called your operating account. You probably have this already in place. This is a basic, free checking account. We're going to use this account to pay all of your regular bills. Your paycheck will go into this account each pay period. So what are the rules for your operating account? The new zero balance on this account will be $250 for students. No more paying fees for bouncing checks. The new zero balance for the gainfully employed will be $1,000. You're a professional. Bouncing checks is not an option. This account will have 1 to 3 months net living expenses at all times. How do we know what your 1 to 3 months of net living expenses are? Because we have a written budget. How will we know how much house or rent payment or car payment we can afford? Does the new payment fit into our written budget using 70% of our monthly earnings as living expenses? 10% of your income goes to giving and 20% to savings. The balance in this account fluctuates month to month because you're using money in this account each month to pay bills and live. The balance also fluctuates because your paycheck is deposited into it every time you get paid. About every 30 to 45 days, you will check your balance online to see where you're at. When your account has more than your specified balance of living expenses in it, everything over that amount will spill over into the second account. The second account is the emergency fund savings account. This is a basic free savings account in the same bank as the first account. You may have this account already. This account should have 90 days of net living expenses for students. This account should have 6 or more months of net living expenses for the gainfully employed. This is an emergency account for emergencies only. This is not for a new car, shoes, or vacation. Once this account has your specified amount, it is full. Everything else will spill over into the third account. The third account is called the Plan B account. This account will literally be called Plan B account. This is not a business account. It is simply how we are going to identify this money. This is a basic free checking account in the same bank as the first two accounts. The only reason for money to come out of this account is to grow your wealth. In the future, if you receive a bonus, inheritance, etc., that money filters down from the first account to the second and settles into this account. Once this account reaches a predetermined amount of cash, You should develop an investment strategy that will incorporate a velocity of money effect. That is where Ethan comes in. If you have questions about anything in this video or to schedule an appointment with Ethan, visit www.ethandaw.com.